This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th, Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Thursday morning, and it's already been a pretty eventful one. You know, starting last night after our, just say, rally failure yesterday, some overseas had weakness, but I guess the theme is it could have been worse. At one point last night, I think the Nikkei was down like 4.4%, giving back almost half of that, you know, big up day, and then I think it finished only down 2.5%, so it held, I guess, you know, a little bit, you know, more than 2/3 or something like that, which is, you know, decent, I guess, for now. And then you had the Shanghai didn't get crushed, didn't crash, was just down 1.2%, and Europe down small. So, you know, our futures were higher, and then you know, I actually was driving in, and all of a sudden I hear on 1010 wins, S&P futures are up 20 handles, and I'm like, why is that? Especially after yesterday's failure, you'd figured maybe we get a little bit of downside follow-through versus the misdirectional moves that we got used to months ago. But anyway, you know, let's just take a quick look at some charts before we go into some tactics. You know, if you look here at the FXI, you know, I talk about the 8 and 21 day a lot. And when you're above the 8 and 21 day, you try and be long. And that's what you had with the Chinese markets for pretty much, you know, the start of the year all the way up into the peak. And then when finally it broke below the 8 and 21 day, put a lower high, and then, you know, really got below it and it turned down, you know, the Chinese markets have been below them, you know, for, you know, multiple months. And then finally, you know, you did have a reflex move, and the key was, does it get, you know, rejected at an old pivot? You know, or does it get rejected at that 21 day, which, you know, used to be support and then turns into resistance in bear trends. So, you know, sometimes you do rally back and it kind of failed there. So anyway, we'll see, you know, maybe what happens here, if it could hold a little bit higher and protect this gap or not. If it doesn't protect the gap, it could be right back to the lows. You know, I want to show you the DXJ, which is, you know, everyone's starting to talk about Japan because of the big moves there, et cetera, et cetera. You know, again, if you look at the trend from way back when to start the year, above the 8-day, above the 21-day, you know, played around with it a few times. You could have got out, you know, when it broke it a few times and then got back in when it held above it. And then finally broke back below it, you know, then, you know, played around with it, and then you came into this apex, and this was pretty much well after the Chinese markets fell apart, and into this wedge when all the markets, you know, moving average started curling down. You wound up getting, you know, a very harsh, fast and furious decline, which does happen fast when it wants to. You know, and then yesterday tried to get back up to the 21 day, just like the Chinese markets, and was sold into it. So anyway, you know, part of my thesis, you know, is your time frame analysis, and as an active trader that trades for cash flow, you know, you want to, you know, be in swing longs when things are above the 8 and 21 day. When they're below them, you're tactical, you look for shorts, you look for quick bounces. You know, and then as an investor, when, you know, your sector or stock's below the 200 day and stays below it for that 4 or 5 day stretch, which is another rule, it's not investable. So as far as today, what to do, what to do. If you look at the SPX, you will see, again, the range that we've been pretty much navigating for the entire first 7 months of the year was broken, you know, about a month ago. Okay, and look how tight this little inside wedge was beforehand. So once this broke, and it finally took out that 200-day with authority, look how fast and furious the move is. And that's why people love to be short, because when the move does finally happen, you can make a heck of a lot of money fast, but you've had to endure a lot of a range. Okay, well anyway, you know, here's the lower wedge. Okay, this was your reactionary low. Let's just make it bigger here so everyone could see. Your reactionary low was 1867. Then you had this, what was this, like 1893. And then you had a lower pivot here of 1903. And then yesterday, it looked as if we were going to perhaps, push above the range and squeeze a little bit and maybe retest higher. But what happened? We didn't. We failed at the 21-day, just like I showed you with the, with the Nikkei market and the Chinese market. So how could you have handled it? I know I came in pretty heavy long for myself yesterday. Sold some while I was talking about 24 hours ago in the, in the pre-market when the spiders were above 199. And then, some guys was like, I'm going to short versus this, and it was only 3 handles difference. So anyway, if you didn't sell strength, you actually had the opportunity to sell when it crossed back below 1970. We all know that can create that red dog reversal before closing on the lows. So question is, what now, right? So I don't think anyone truly knows, except for there's a lot of people out there saying we need to retest this. We need to get back down to that 1867. Now, typically, in technical analysis, you do get a retest of an area, especially after such a big, fast and furious break. It happens somewhere between 2 and 8 weeks, past that point. So we're about 2 weeks past the point, so who knows how long this range can last and we could maneuver it. But again, it's September 10th, I think, and most bottoms or bottom process takes through September into October, so we could have this going on for a while. So a few tactics that I use for cash flow is, the red dog reversal. That's a good way to buy something versus a level and then try and play a bounce for a day and a half, and then you could also use that red dog reversal to sell those longs and maybe get short. And then also the H sell setup, which is, you get a big move down like yesterday, futures are up 6-7 handles like they are now, and you see where resistance is and see if the H happens. So you short some resistance, and then if it rolls over, you then can add once it breaks that prior low. So that's pretty much your strategy for today. What happens today? Does the market that's, has a, first of all, the futures were up like 20 handles a while ago, and now they're only up 6 or 7. Does it try and bounce, and does that bounce get sold? So if you sell into that rally, you get a good price, and then if it breaks the prior low, usually you get some kind of waterfall. So then you even get, 2 good, price points, and then you have better prices to make money with. So anyway, you go back to the SPX, you'll see, what the question is, on this little small up move in the futures, does, the H sell setup happen where you could short into this, add here, and then, you have room to the downside to make your money? Or does they try and push us below this low, create a tail, and, there is that red dog reversal. So let's use it with the spiders. Spiders, same thing, very ugly, ugly day. Got up to the prior pivot, failed it. Oh, what a quinky dink, the 21-day moving average, which it's below, and then also took out the prior low. So we come in today saying, what do we know? We know that this is yesterday's low, 194.35. So what I did in the Redler All Access note, I wrote down the low of yesterday for a lot of stocks and sectors, because that's what you trade against today. Because if it breaks this, it can go a heck of a lot lower, or it could break it, not get downside, come back above, and give you, another pivot. So anyway, you go to your 5-minute chart and map out some resistance. So you go here, you go to your 5-minute chart, so you can see what happened yesterday. So, you look here, okay, and basically look at this gap up, by the way, and it failed, and then couldn't rally and continued lower. So if that you want to use this H sell setup, okay, versus just shorting it when it makes new lows, your first area of resistance is like this 196.50. So if it, if we rally first, it was at 197.50 this morning, and it comes up into this, some guys will say, I'm going to sell into strength. So if it rolls over, I'm not just putting my first short on trying to, trade it through a low. Okay, and then if it gets through this, you have resistance 2, so resistance 1, resistance 2. So in my note, I wrote down the pivot low, resistance 1, resistance 2. If you think you could play a bounce, some people will play it to resistance 1, maybe even a little bit more. If you're saying, I'm going to short every bounce out there, here's a spot, there's a spot, and then you have the prior low. And you could do the same strategy in everything. Any stock you're trading, any sector you're trading. Now obviously you want to see what's relative. If you're trying to short, you want to short the ones that are relatively weaker, because they typically go red first and they give you more bang for the buck to the downside. But so if you just say to look at some other scenarios like the Qs, here is your yesterday's low, so you write down yesterday's low, okay, and then this would be pretty much just say resistance 1 right into here, right, resistance 1 around 104.70, so if it tried to bounce up, came into there, maybe you short it, you know, if resistance 2 comes in right around there, so you write down 104.77 and then 105.50-ish, something in those areas. Then obviously you go to the daily chart, you'll see, you know, pretty ugly candle yesterday, just like everything else. This thing actually failed at the 200-day, you know, and tried to fill this gap and failed and reversed. So the question is, does that create more weakness? In order for it to create more weakness, it's got to trade through yesterday's low of 103.59. And if it does, then you have to have other support mapped out to figure out, you know, does it really break to the downside or not? So, you know, I'm not going to run through all the sectors. You can do it yourself, but basically, you know, you look at the IBB, you look at the IWM, you look at the banks, all the same thing. You know, as far as a focus today, a lot of talk and focus is going to be on Apple. How does Apple react the day after the event? The day of the event, they typically sell it, and they were actually able to do it again. So some guys made money short, or some people just were out of it. I didn't really trade Apple yesterday. But today is the day that everyone thinks, okay, it was down yesterday, it's done, and you see if real buyers come in once they actually look at all the new products and all the upgrades and everything. You know, I'm still a big Apple fan. They expanded their ecosystem. I'm not going to get into their product lines. You can read about it everywhere, but you look at the stock, and the stock is something to watch, you know, today. Does Apple get downside follow-through? If Apple gets downside follow-through below yesterday's low, I'm sure the market psychologically might come off also. So what do you want to do? You want to write down 109.77. Okay, yesterday it pushed through here and failed. So that was your red dog reversal. That was your, you know, your short setup or get out of your long when you push through a momentum level and can't hold it. So now the question is, does it break this level and get downside follow through, which would probably help those in the bearish camp get their retest of the lows. You have this small little uptrend here, which comes into play then. Okay, that's the bottom end of the wedge. It couldn't break above the top end of the wedge, and now we see if it could break through the bottom end of the wedge. So, you know, write down this little spot of, what is this, 108.51. Then you also have 107.72. If, you know, the bulls want to take a stand and they push this below 109.77 and it goes to 109.50 and comes back above, all of a sudden everyone who tried to be short thinking that we're going to get further downside get trapped, and then you get that little red dog reversal. So that's why you want to know where that low is. And for Apple, it will have a big psychological impact on the market because we're all looking for direction. We're all looking to see what's next. You know, Apple, since that big breakdown, has given us clues. First, it broke the channel, which gave us clues that the market was going to break down, that S&P was going to lose 2040, etc. You know, now it'll give us some clues on, you know, how do we maneuver this range. Two other stocks which really, you know, are just hard. You know, some guys are having success, some aren't. You know, this is not a very bullish looking scenario where it breaks above a wedge and can't hold it. So now, you know, today, see how does Google handle, you know, this 640. If it gets below 640, some guys might short it. If it holds it and goes sideways, maybe we don't fall apart. So know where Google is around 640. Amazon, same thing. Best in breed, you know, couldn't hold a breakout move, but either could the market. Broke out and here gave a little bit of follow through and failed. So see, some guys might say, oh, it's up $3. I think this thing's coming in. For it to come in, it's got to trade below 515. Gets below 515, maybe guys can make some money short, and then your next level comes in around 509. So, you know, they pretty much look the same. They're just loose and wide, and if you can handle it, you can handle it. Netflix was probably one of the better day trades yesterday. Everyone's been shorting that rally. It's been working. And yesterday, even in here, I'm like, I think this one, if they can't get it to go negative, it's going to be a good squeeze, you know, especially considering you have the Apple event, and just in case they don't announce a streaming product, perhaps it pops. And you did get that yesterday in Netflix. But for today, it's really not that compelling. I think it's up 80 cents. They might try and bring it negative. If they can't, you know, maybe you get another push here, support. You know, so I would say if it could hold this, what is this, 95 for a little bit, maybe there's another trade if it takes this out. But then remember, the 21 days has been resistance, you know. But again, I'm not going to over-focus on this today. Yesterday, it was my focus in the first 30 minutes, and it really worked out well for the VTF. You know, and also guys in Redler All Access that watch this because they were prepared that, you know, you could get a quick squeeze, and, you know, $5, $6 in 30 minutes, you know, could pay your monthly bills if you catch it correctly. Facebook was one of the strongest stocks out there, but it too, came under pressure towards the end of the day. So all, tides usually move together, etc. See today, for sentiment, how does Facebook handle yesterday's lows? You have a bit of a topping tail, came into the prior support that turned into resistance. It's had a decent move from the lows. So some guys might say, you know what, let's see if Facebook holds up or not. So if it gets below 90.17, some might try and short it for a little bit of a move lower, and then you map out your three supports. So this would be support 1, support 2, support 3. And you could watch this. If all of a sudden Facebook starts falling apart, which I don't know if it will, that'll give us some clues that there's going to be more market weakness. If Facebook goes sideways and holds yesterday's lows, chances are markets may be down but not falling apart. So that's how you measure speed and volatility. As far as like some other things out there, I know Palo Alto, or PANW, had a really nice report, up like 5-6%. See if they sell everything, see if they sell this. Here is resistance 1. I don't think I would be chasing resistance 1 here, but some, if you want to say they're going to sell everything, see if it's shortable around 176. If this gets into 176 and is able to hold and extend, then maybe markets are a little bit more healthy and they'll reward certain environments. And then I want to talk real quickly about MBLY. MBLY is a stock that we've been trading. It's been on my note for almost 7-8 months. There's been lots of entries, lots of exits, lots of ways to trade it, and some actually have it in the draw. Citron came out with a negative note going against their whole business model. You could probably read it online. So this is where you need to figure out, where do you live? Do you trade things actively? Do you have it as a swing account, or is it something that's really in the drawer and you're like, I want to look at it 3 years from now? Sometimes you do that and it doesn't work. Sometimes you do that, it works. For an active swing, it hasn't been an active swing of ours for like 2 months, ever since it had the false breakout and gave up the 8 and 21 day, because as a trader, you don't hold things that are below the 8 and 21 day. You trade them. But if it's in the drawer, it's different. So MBLY, at this point is, technically weaker. Okay, remember when it was following the 8 and 21 day, this was a nice trade from when it broke out above this, which was about 48, all in the way up until finally, this breakout failure, which I got out right around here on that day. Or you could have waited till it broke the 8 and 21 day, which is right there. So as a trader, those were your outs. As an investor, though, you have to, think, okay, what could be next? Who's right here? At this point, you've had these, your entries, when it broke the descending channel, or when it broke, this little channel to the upside, and then you had your add-on trade here. So now the question is, will you stay with it in the drawer? My rule for investments is if it breaks and stays below the 200-day, which it's right now broken below, for 3 or 4 sessions, you just get out of it, just in case. Get out of it and then wait for the stars to align up again. Remember this little corrective phase that happened here? A lot of people thought this was awesome, and then who knows if they were able to handle it during this entire phase lower. Okay, if you waited for a reset up like a descending channel, gets above the 8 and 21 day, you had a lot less pain. Now, you don't really know where it's going to go, especially now if it stays below the 200 day. So if it's in your drawer, you might want to take it out for now and then wait for some kind of better setup, and it should happen. But right now, everything is facing lower. So if it's in there for the next few years and you fully think that it's, it's going to work out, then okay. If you trade it using rules, your 8-21 day active swing rule was here into there, and now you were coming into more investment rules where if it's below the 200 day, you could get out and always revisit. And so it's Thursday. We're still in this range. We still have time until September 17th, which is when the Fed might raise rates or not. There's a debate every single day. You also remember September 17th is, more importantly, the blackout when corporations can't buy stock back again because earnings season starts. So that's a lot less buying pressure. So between now and then, you still have them in there, but after that, depending on where we stand, that's going to be gone. So we have to be aware of that as well. And then also, so that gives you 4 weeks of who knows what, for some type of bottom process if that's going to happen. So with all that said, there are trades out there. You could use the red dog reversal with prior lows as active longs into hopefully some kind of follow through. You could also use it to reduce or sell, like you saw if you were long. From Wednesday into, or from Tuesday into Wednesday, you could have sold strength, and then when it lost that prior high, you could also use that as your short entry. And then now moving forward today, we have yesterday's lows after the potent downside. We want to see if it holds or not. If it doesn't hold, people might press that as a short. You could use the H cell setup just in case it rallies first to get better prices. We don't know if resistance 1 or resistance 2 comes into play. Like this morning, spiders were 197.40. So if you started shorting it in the morning while you're eating your breakfast, if that's what you do, you might have not made it all the way up, or whatever. So use your tactics for now because the jury's out. You're going to listen to TV all day long. You have guys say, we're going to retest the lows. You have guys who are going to say, we're going to go to 1570 on the S&P. Then you have guys that are going to say, what, the lows are in. We're going to get back to retest 2020, 2040. We're going to close the year at 2100. Right now, these are all opinions, all a mishmash, okay? The way you navigate the mishmash is by having your process. Long term, I think, stay the course. You're my age, you're 10 years younger, 10 years older. Put your monthly flows in. This will help your average cost if you're a macro investor with a 401k or 529. If you happen to be 80 years old, which if you're watching this, what's up? I've seen 80-year-old triathletes, so whatever. And you need your money tomorrow, chances are you probably should be in a lot more cash than putting money in every single month. But that's know your time frame. And then if you're active for P&L, use the tactics, create a month, use your discipline, and expect the unexpected because it feels like we're getting back into that misdirectional type of trade with somewhat random to try and fool you versus, continuity, which we've had, for a little while the past few weeks while it's been here. So I'll be on the VTF. I hope you have a great day. Tomorrow I will be trading from Short Hills, but again, this is probably your last video from me for the week. Have a good one and enjoy the the football season starts. May your fantasy points be with you.